first, we're going to talk about the general rule for Pennsylvania inheritance tax, and we're going to refer directly to the Pennsylvania Department of Revenue website, which defines Pennsylvania inheritance tax as a tax that is imposed as a percentage of the value of a decedent's estate that passes to beneficiaries under a will, heirs under intestacy laws, and by operation of law. So let's break that down a little bit. Beneficiaries under a will, pretty straightforward. You draft a will, you name beneficiaries within the will to receive certain assets from your estate. Those assets or those transfers are subject to tax. The next was heirs under intestacy laws. So if you die without a will, your assets pass based upon the state's intestacy law. So Pennsylvania has specific code provisions that outline who are defined as your heirs, who are the people that are in line to receive your assets in the event that you did not name beneficiaries under your will. And I have an entire video that's dedicated to that topic, so if it's something that's interesting to you, please check it out. And third, the tax is imposed on assets in the estate that pass by operation of law. So these are things like jointly owned property. They are items that pass by contract. So certain business ownership or stock may be set up to pass automatically upon the owner's death. It also includes beneficiary designation forms, which are considered contracts. So often you can name directly with the custodian on the account beneficiaries where those assets will pass outside of estate probate, go directly to the beneficiary, and the state wants you to know that those assets too are subject to Pennsylvania inheritance tax. And before I go on, that is a common misconception. A lot of people think that if you avoid probate, you avoid inheritance tax. It's not true. Many assets that pass outside of probate are subject to Pennsylvania inheritance tax. So backing up a little bit, we're going to talk about part of the definition states that the tax is imposed as a percentage of the value of a decedent's estate. So the way that this works, when someone passes away, we pool all of the assets together, we value them as of the date of the decedent's death. So we're looking at each asset in terms of its date of death value, again, for the purpose of determining the tax. Then we remove from that or subtract from that any debt that has to be paid, any liabilities that are taken care of, any costs of estate administration. So that includes things like funeral expenses. It includes things like advertising the estate. It includes filing fees for probate. It includes attorney's fees. It includes executor's fees. We pull all of that out or subtract all of that out. And then once we remove those costs, once we remove those debts, whatever is remaining is generally subject to Pennsylvania inheritance tax. So the next very important question is, what is the tax rate? The tax rate depends upon the relationship of the person who's receiving the asset to the decedent. So anything that passes to a surviving spouse is an exemption. So this is the first exception that we're going to talk about. This is the first exemption that we'll talk about, and this makes sense. Anything passing to a surviving spouse is exempt from Pennsylvania inheritance tax. Beyond that, anything passing to a lineal descendant, so that's a child or a grandchild, it could include a parent, so an ascendant, is subject to 4.5% tax. Anything that passes to a sibling is subject to 12% tax, and anything passing to any other person, so a non-relative, this could be a friend, it could be a distant relative, someone who isn't captured within the previous examples that we gave. That includes cousins, it includes nieces and nephews. All of those people are subject to tax at a rate of 15%. So this is the highest tax rate in Pennsylvania for inheritance tax, and it's one that should be considered if your beneficiaries or many of your beneficiaries or any of your beneficiaries fall under that 15% category, it's something that probably should be discussed in the estate planning process. So the general rule is that anything passing by reason of death is subject to Pennsylvania inheritance tax. And I'm going to give or take that even one step further. This also includes anything that was gifted within 1 year of the date of death. So this rule exists to prevent people from giving everything away on their deathbed for the purpose of avoiding inheritance tax. So anything gifted during that 1 year period before death is clawed back into the estate for the purpose of determining the tax amount. I want to thank you for joining me in this video. The second part to this video, where we get into the exemptions and the exceptions to the general rule, I think will round out a lot of questions that people have. So please stay tuned, hang out, watch that video, and if you like this content, please let me know, and I'll look forward to seeing you in the next video.